Stock market today analysis for Aloha Monday, April 17th, 2023. I got great news for you, my friend. At the 1 minute mark of this video, a link is going to pop up right here. The link will be to a video explaining the unfair advantage of selling cash secured put options on stocks you'd be happy to own. You see, in 2023 and going forward, I believe if you have an internet connection, a bank account, and you spend money at least once a year, then you have no legitimate reason not to be selling cash secured put options. I put that video at the 1 minute mark so it's easy for you to remember. It's going to be popping up in about 5 seconds. Actually, it's right now. 1 minute mark. That's easy for you to remember. This website is easy to remember. ihavesuccess.com. Free stuff. Paid stuff. It's all about this stuff. Selling cash secured put options on stocks you'd be happy to own so you can cash flow the stock market without spending a lot of time in front of a computer screen so you can be doing other things. This strategy is like the tortoise. It is not get rich quick. But check this out. When you are ready, remember the 1 minute mark. This is forexfactory.com, and it does more than one thing, but it's a nice handy calendar that shows you in a very organized fashion things that are going on. I got it set up right now to just show us stuff that's going on in the United States or via the USD, US dollar, concerning all these different things, miscellaneous, la-da-da-da. I don't have the gray, the non-economic stuff, but we got these different things with red being the high impact. So we see today we had the Empire State Manufacturing Index, and then on Thursday going to be unemployment claims. On Wednesday it's going to be the Purchasing Managers Index. And then another Purchasing Managers Index related type of thing. These things have not been moving the market as much as other things lately. Speaking of the market, this is a heat map. It gives us a quick look to see kind of like what closed up, what closed down, and kind of the weight that these different companies have on the market in these different sectors. And we see more green than red for sure. More advancing today than declining. We still though have about a little less than 60% hitting new lows. A little over 50% below the 50-day moving average. A little over 50% below the 200-day moving average. So this right here is giving us an indication that we don't really have a full market participation screaming up. You know, we've kind of got a half-half market, right? Even though we had 60% advancing, this is telling us something. Anything interesting going on in the news? This one is an ad. You know, now instead of changing the definition of a recession, there's more talk of can we right here power through a recession? But overall it seems like the stock market kind of moving up, right? We'll look at that in a second. Let's quickly look to see if here, latest insider trading. This is probably not the full gamut. Maybe it is. I don't know. I never fully looked into it. Keep in mind when it comes to insider buying and selling. When it comes to insider selling, there can be a lot of reasons why. It's not just necessarily bad news. But when it comes to insider buying, it's kind of like there's only one reason why they'd be buying, right? It's because they know something that's worth. I guess there can be two reasons. Maybe they want to, I don't know, pump the market a little bit, but I don't know if they would really do that. So, I've always heard that there's only one reason why they would buy, but maybe there's two. Maybe they want to, kind of fudge things. I really don't know if it can work that way. So generally speaking, there's supposed to be only one reason why. But to sell over here, there could be more than one reason, right? It's not just because the stock is doing bad. It could be because they, you could have one of these big wigs at these corporate companies getting blackmailed. That's unfortunately, that's the way the world works. When you have a lot of money, and you go out and live a wild party life, maybe you do some things that you don't want your wife or your husband knowing about. Maybe you got to pay off some blackmail stuff, right? I don't know, or it could be a good wholesome family, and kids getting married, and dad's gonna flip the bill. So it could be anything from scandalous to non-scandalous to the companies going down the tubes. But generally, the buying part, right, is only one. So let's look over here. We're looking at a 10-year weekly chart, and obviously it's in a line format. What do you see? What I'm seeing is I see a bit of a W right here. Let's bring out this handy dandy right on the computer screen, and we'll change this color. How about to blue? I see a bit of a W right here. I want you to notice that this part of the W is higher than this part of the W. And I also want you to notice that here's that peak in the middle of the W, and at the moment it looks like we're passing that. It's barely past it. There's probably a little range. It's probably not going to be a 1-for-1 ratio, but it's a little bit of range in there. This could keep going up. Really around our 420 mark right here is a pretty good indication. Look at over here. It got way above the 420, or a little bit above the 420, and it came back all the way down here. So we're kind of watching to see. You can also see low, higher, low, higher, low. Would someone say we got a high, lower high, lower high? I don't know. Maybe someone could say that, but maybe look at this. It looks like it could be kind of topping out. But it looks like our range is getting tighter. That's when I look at over on the, let's take a look at, let's move this out to, whoopsie. Let's move this time frame to 1 year. See if that helps us. Now we're going to go, let's do 2 years. I'm noticing like a tightening up. For example, the movement here is longer than the movement here. This is shorter. I know that one's a little longer, but it just seems like instead of having these big declines and big upswings, it seems like they're getting shorter. Even to the point, was this the pullback? I don't know. So now we're kind of reaching around this area. Back around this area, I was making these videos saying we want to see what happens when if it goes through the 420. How does it go? What happens between 420 to 430? And right when it was getting close, what did it do? It went the opposite way. So we're getting back there to see what's going to happen. Got all the way down here to 380. How long? What are we at? This is 1 day. And what is this candle over here? I'm looking over here at the date. The candle is from the third month, right? And then pivoted up. So we're basically still in a bit of a sideways range. Let's take a look at this. This stochastic, it very accurately tells what happened in the past. Now, I don't know how well that helps predict the future, but it definitely helps. It very accurately. It's not fake news, right? It's a legitimate news of what happened in the past. So it looks like we could. When looking at this, we want to see prices get up around here, around this 90. Right, we see over here when it was going up, prices came up here. That's about the highest they came through here, and then once again over here, but that was down lower over there. and then it's kind of been pivoting around here. So yeah, we will see. I don't think that's the I wouldn't pause this video and copy that and try to figure out how to make a lot of money using that. I don't really use that stochastic too much. But so that's what I see is a tightening up of the range. So so how can that help you? How can it help you? If you're not really sure which way stocks are going to go, I'll tell you what, this is a pretty good thing to be doing, selling cash secured put options on stocks you'd be happy to own. So what ends up happening is let's say we'll look at the S&P 500 as a proxy for the overall market. Now let's say we start moving into a bull market. Then what you could potentially do, instead of you just kind of use some different stocks. Like let me explain about the downside first. Let's say the market's moving down, and moving down. All right, during this time moving down, I was selling cash secured put options on stocks I'd want to own, that I might be happy to own for the long term. Now I might not own them for the long term, but it's kind of like a safety net when I can own them for the long term, when I'm happy to own them for the long term, right? So when just like when you go to the grocery store, when food is on sale and you like that food, you might buy a little more of it. Well, if there's some assets on sale and I like those assets, I might buy a little more of them. Now, when the market goes down, and then it kind of goes into the sideways movement, but it's going sideways closer to the bottom of this range right here versus being up at the sideways up here, then I'm potentially still comfortable selling cash secured put options on stocks that I want to own. Now we're moving to the higher end of this range that the stock market's been going in, between this 380 to 420. Now I know, chuckle. Some people, they think 420 is a funny number, and some people think 380 and 357 are a funny number. But whatever numbers you like, that's totally your prerogative. But it's been in this range, kind of between the 420 and the 380, where I've been watching. So now we're higher at that range, right? We're more closer to the 420 side. So if it starts not necessarily ripping, but it starts moving up, and it's going to keep going up, then I'm gonna look more at selling cash secured put options on stocks that I'm really comfortable doing the wheel strategy with. If you want to know more about that stuff, you got to check out the free stuff over here. Got the playlist and these downloads, and if you want some one-on-one help, you can do that. So that's generally what I'm doing to keep myself reducing risk. Because if I'm you go back to that video at the 1 minute mark, if at the end of contract expiration date, if I'm okay with both outcomes, then that's a wonderful place for me to be in. So we went over that. Let's quickly take a look at the overall stock market. Those are different sectors. 12 different sectors. Take a quick look. Kind of see things going sideways here in utilities. It's been going up, pulled back a little bit in healthcare. Financials kind of making up some movement up here, because I don't know. We got some flip and bake problems in this country, but investors are feeling safe somehow. I heard somebody talking about us mainly JP Morgan Chase pushing that up, but I'm not sure. So industrials up a little bit, but you see it's this is, and keep in mind, this is 1 month. We're really only looking at 1 month of data here. But getting back up to the top of this range. We'll see how that's going to go. Over here in basic materials, up but going sideways now. Kind of sideways movement here. These two are kind of like overlap a bit. Over in retail, we're below that 200-day moving average, where so far all of these except for XLF financials have been above the 200-day moving average. Below it over here in retail, and not looking like it's having an easy time breaking out. Same thing with real estate. We're below. It's not even trying to break out over that 200-day moving average. And utilities kind of banging its head against there. Consumer staples starting to move sideways. And we got this look over here in XLY, consumer discretionary, that sort of has the same sort of look as here and here. and definitely energy going sideways. Take a look at those big sectors of not sectors, but what I kind of consider the general markets. The dollar overall has been moving down, right? But it's been kind of volatilely moving down. It rallied up a little bit, dropped down. Now it's rallying up here. TLT, an ETF for 20-year treasuries, back at the bottom of its range. Gold has now been kind of moving sideways, but it's staying above that 200 US dollars per ounce. Now, in other countries using other currencies, it's not 200 pesos for an ounce of gold. It's not 200 yen for an ounce of gold. It's not 200 rubles for an ounce of gold. I don't know what it is in those other currencies, but I just want you to keep in mind that sometimes what's happening, especially when it comes to an asset like gold, and this is, by the way, this is gold futures contract. This is not for an actual ounce of gold, but for a futures contract. And sometimes what's happening, though, is it's not the value of gold that's going up and down, because the properties of gold have remained the same since, I guess, the earth has been formed. It's the value of the currency you're buying the ounce of gold with that goes up and down. Is that what's happening all the time? I don't know if it's all the time, but please be wise enough to understand the difference of an asset losing value or gaining value, and the currency you are transacting that asset in losing value or gaining value. It's a nuance, but it seems to be a nuance that sophisticated investors are aware of, and I want you to be sophisticated too. So oil is pushing against this 200-day moving average. See this range of 64 and some change up to 83 and some change. We'll see how that's going to go. Oil is pretty much used in everything. It's not just gasoline. If you using a cell phone, it probably somehow has some plastic in it, and or you got a plastic cell phone case or something that somehow there's probably oil involved in that phone, the making of it, the getting it to you. And oil, I don't know if people fully understand how integrated oil is into our society. When I hear my acquaintances, anytime I've talked about selling, about trading in the oil markets, a knee-jerk reaction would be like, "Oh, why are you doing that? No one's going to use oil in a couple of years. Everybody's moving to electronic vehicles or electric vehicles." So I can just tell a lot of people don't fully understand how much oil is used in society and what different aspects it's used. So don't be that type of person. Do a little research and figure out all these different products that oil is used in, at least so you can be a little bit educated. Futures on the Bitcoin. All right. Been moving sideways, right? We're moving up. Is it going up to the sky? I don't know. I'm not sure. The most I could do is trade the futures easily. In the state of Hawaii, we don't have the freedom here to do that. Our rulers, I guess, say, they wag the finger at us and they say that we are not smart enough, we are not mature enough, and golly gee, I'm sad about that. So over here in the VIX, moving down, look at that. So fear in the market, allegedly, is moving down. All right, the volatility is moving down. I don't see the market like screaming up though here. We got the NASDAQ basically moving sideways. Dow Jones, it's moving up. It's moving up over here, and it's moving up, but it's kind of doing the sideways overlap. With everything that is going on in society, I just really don't understand why there's not a little more or fear. Oh, silly me, I forgot. The economy and society is not a one-for-one comparison with the stock market. The stock market is maybe the society and the economy affects it a little bit, but this thing kind of has a life of its own nowadays. It's not, you can't really look at what's happening in the economy and society and think that there's going to be this, knee-jerk reaction or direct correlation with the stock market. Like, the stock market is kind of a little thing of its own. And I guess we could go through all these different It'd be good. It'd be good for me. Hope it's as good for you as it was for me. But definitely would be good for me to take a look at these different things. Oh, look at this! What a pleasant surprise! We're looking at the futures contract of the S&P 500, which happens to be trading right now. What do we got here? We're on 6 months. All right, and so right now we're at kind of the top end of this range. But let's take a look, fly through here at the S&P 500. All right, you see this? You see this? Let's see what's going to happen over there. Apple's moving on up. It's got to get through this though, right? Right now, it could. It's kind of pushing to the top of that. We see this current range is about 160 to about 165, 166. Let's see what's going to happen. Apple's in a lot of different things though, and that's I think one reason why we're seeing this. I don't know if you want to call that a discrepancy, but you got half the market below the 52-day, 50-day moving average, or we should just look at this: half the market below the 200-day moving average. And we got a certain amount of stocks that hold a lot of value in the S&P 500, in the Qs, in these indices. So you don't really need a whole lot of stocks moving up. You just need the right stocks moving up. And case in point, instead of maybe looking at all these, let's look at this: Apple, Microsoft, Amazon, Meta, Google. Google a second time. Isn't that interesting? They got Google in here twice. Berkshire Hathaway, Tesla, Nvidia, JP Morgan Chase. Now, if we were to have a bit of diversity, like supposedly people want in life, they want diversity, right? Diversity and inclusion. If we had diversity and inclusion in the stock market, then when we looked at the Qs, we would expect to see a diverse ticker symbols, right? And inclusion, including other stocks. But what do we see? We see Apple. We see Microsoft, Amazon, Google. Hey, at least Google's only there once, right? Meta, Tesla. Oh, oops, Google again. Look at that. Out of 2 indices, Google is in there 4 times. Where is the diversity? Nvidia again. Oh, now we got a different one. PayPal and Adobe. So instead of JP Morgan Chase and Berkshire Hathaway, we got PayPal and Adobe. But everything else is the same in the top 10. And it does. That's where we see it the most. But we also see in here, we see, what do we see? We see Microsoft again over here in the Dow Jones. And then definitely we got some diversity over here in the IWM. We don't have any of those same big name stocks. So overall, because of the way things are set up, now whether it's good or bad, I don't know. I really don't care. I'm going to make money regardless of how it's set up. I'll figure out a way to make money. I hope you can figure out a way to make money regardless of the way things are set up. But you know what's, personally, I just like to, I just like living an informed life myself. So, if the stock market is different than it was in the 1980s, I just want to understand how it's set up. I don't want to try to bring back the 1980s. I want to live in the moment and understand what is reality in the moment. That's personally what your good buddy Brent wants to do. If other people want to live in the moment and not live in reality, they'll live in la la land. That's ultimately, to each their own. I just hope they don't harm other people. Don't harm me. But we're obviously doing this a little bit differently today, my friends. Not gonna look at all these different stocks, but let's look at Crocs. Just because why? Because you ever tried to walk in water with Crocs? I thought they would be good hiking shoes, and those things, they kind of tried to float up on me. So they weren't the best hiking shoes, although they definitely you have to worry about wearing regular tennis shoes when you're hiking. But I just didn't think they made the best hiking shoes, in my opinion. But, to everybody teach their own. So anyways, what should you do? Depends what's going on in your life. At the minimum, check this stuff out. See if you can fit this into your life, my friends. With that, I hope you have a fantasmo day. Whatever day it is you're watching this. Aloha.